Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. It is Monday. We started the week, and a lot of us weren't sure what we were going to do. Would we digest higher? Does the market need to retrace? Because we had a huge move, right? An 8% move off the lows from a few weeks back, but 3% off highs keeps everyone on edge. So what we tried to do this morning is map out, support 1, support 2, support 3 to see how strong is this market, how much commitment to the snapback is there. So this way we could judge how fast and how quick we have to maneuver. So you look at the chart of the spiders, or this is the SPX, and you will see, once again, this was your V bottom. Okay, V bottoms do happen fast, so you have to trade fast. Here is when it went above this 2-day pivot, saying, okay, we are going to bounce. Just the question is, how much are we going to bounce? So at this point, if you didn't cover into here and you were short when the 8 and 21-day broke, or you were short when the 150-day broke, or you were short when the 50-day broke, that was probably a little piggy of you. Anyway, once this V bottom happens and once you get above a prior pivot, you have to figure out what's next. Do we reclaim the 200-day? Do we power through 1925? What is next? We reclaim the 200-day, and then you had your gap and go that just squeezed pretty much any early shorts out. And then, lo and behold, on Friday, we had the first NYC Ebola patient, and the market took that in stride. And then today, oil went below 80 and then held. So today the market also could have been weaker. This was support 1, here was your support 2, and then this was, support 3, and we really didn't even get down to support 1. So that's telling me that there's still appetite for risk in this market, and you have to think fast. And if you're just looking for shorts, you're shortchanging yourself. Anyway, here's your upper level flag. I'm not sure if we have to spend another day or so in there, but if we start getting above this 1965 pivot, which pretty much is the top of this resistance area, there's really nothing out there until about 1985. You look for leadership, you still have it in the bios. The bios came off a little bit, went green and closed highs. This group pressed above yearly highs first, and why would it not? Because it held the 200-day where most sectors didn't. It's a little extended, but if you're in these things and trailing them, they've given you no reason to get out. I wouldn't be all in, but I've definitely given you no signals to be short in this group. If you look at the XLF, kind of in line. XLF actually closed a little bit higher than Friday's high, above all the moving averages. So there is some strength there. Actually, Goldman Sachs has been kind of leading the way. Goldman Sachs is above this little pivot right here, whereas some of the other banks aren't, and above the moving averages. If you look at something like Citigroup, I was looking at it today, thinking maybe get some kind of bank exposure. We'll see what happens tomorrow if we can get above this 52. I'm actually long Bank of America. I took it off and then put it back on. That does have a decent high-level flag. So at this point, it's not showing you, relative strength, but it's hanging in there. I can't have all beta on. I need to have some things that move a little slower. And then real quickly, what does JP Morgan look like? Another mid-level area, nothing too compelling. Qs, what'd you do today? Still, this one actually showing relative strength as well. Spent 1 day below the 200-day. Okay, think about this. 1 day snapback. It wasn't like the DAX or Germany or most of Europe that traded below, just to talk about the 200-day, below the 200-day, and then stayed below it, accelerated lower, bounced back, and then what did Europe do and what did DAX do? Hovered below the 200-day, didn't snap back above it, then you had continuation to the downside. And while we're on this, let's just take a look at to see if there's any kind of commitment. At this point, that was your reversal. Here's your gap up that's still holding. The longer it consolidates above, just say there's 26, the higher the probability maybe this gets taken out. And if the DAX or the EWGs want to retrace a little bit higher, it would actually provide a better backdrop versus a headwind, which it's been since the summer. So as far as just say high beta names, Apple's still hanging around. Another day maybe, and we can get another trade above 105.50. It's still hovering above the prior high. It's a little bit extended, so I would be lighter. I'm a little lighter, but I'm trying to stay with this as a swing trade. Another great swing trade has been BABA. I've been really talking about this a lot, and because I figured at some point if it gets into the 90s, some momentum could happen, and here's where it woke up. This is when I put the chart out there on my Twitter sphere, and look where it went to. Okay, I think a little sideways action would go a long way for potentially a move above the IPO highs. Lots of times I kind of compared this chart to how Twitter looked when it first came out, just to give you a comparison of what could happen if something takes off, and that's what this did. Twitter was a high-profile IPO. Everyone bashed it when it broke to the downside right there, reclaimed it, broke this downtrend, held higher, and look what it did when it went above its IPO high. Boom. Too many people shorted this during this process versus riding the trend. So at this point, I'm trying to figure out if you can learn from your mistake and actually, stay with this, learn how it trades, because this was a nice vehicle the past week or so. I haven't had many longs on in the last week, but this has been one of them, and you don't need many. You just need a few. And while we're talking about Twitter, just say it did come out with earnings, which were pretty much in line, and the stock hasn't acted well. We've been talking about it. I haven't been sure why. Maybe, the minds out there who know with the smart money, who have connections, which we don't, knew that earnings weren't going to be the same as they were here. So they were selling into this. Remember this wide range bar down. This remained in control on this bounce. So it's been acting weaker. There is, some big support in this gap. I think it was there momentarily after hours. And then, bigger support down here. So we'll see what happens tomorrow. We'll see where it is. It was not acting well. Not like a Facebook that bounced right back to the high. So I guess people know that this report will probably be somewhat, good, considering all those ice bucket challenges or whatever. But this bar got negated real quickly before making highs, showing you relative strength. So this chart looks a lot different than Twitter did, and that's how you judge some things based on relative strength and weakness. I actually took small calls into it just in case they had a good quarter, because a lot of people were doubting them because they said this was all based on the World Cup. So whatever, risk, or for options, your loss is premium paid, and I took a half a tier of the 49s, and it is what it is, not even a full tier. So I didn't even tweet about it because it was just something I felt like I would try. But at this point, down here might be a better long after if it's priced in. It did come in from 55, so all the way down to here. We'll see how, if it does what Netflix did. Remember Netflix? Netflix gapped down and gave you a really good trade. If you weren't caught in it, which a lot of us aren't caught in Twitter, gave you a gap down and then gave you a nice day trade if you bought versus those lows, and then gave you a nice even gap trade right there. And now, it's just while we're on Netflix, it's trying to hold higher. We shall see. What's Google doing? Really not a heck of a lot. Google's, trying to stay relevant, trying to flag. It did get above this lower pivot. It's trying to flag in front of the 200-day, but it's just been a weaker stock. We'll see what happens next. It's really not that compelling. Amazon gave you a small bounce, but this too, what did that do? It's still, hovering down here. I guess, maybe we get a trade. If it could do a few inside days, maybe there's a trade into this gap also, which is just good for tacticals. None of us took this long into earnings because that's not what we do. I don't even think any of us played an option, but now down here, after, a huge move like Amazon's had from 400 down to there into, I guess, some bigger support, maybe there's a trade. Maybe there's a trade into that gap, kind of like what we just saw with the Netflix. And then you'll see if it can get above this and hold above this, which was 293.81, perhaps it wants to push the envelope and do something. We'll see. Right now there's a huge hole here, and it's below all the moving averages, so it's not a swing long. It's just a potential tactical trade. Today we listed CYBR as a potential tactical trade, and wow, was not expecting that. Talked about it, tweeted about it on Friday, and then I actually posted the chart today because not that many charts out there that were above the 8-21-day tight pattern for multiple months. So boom. And if you look here, you go to basic studies, you put some volume in, and there was some decent volume today. So we're right back to the IPO highs. I don't know if it blasts through it tomorrow, but keep this on the radar. It moved really well. Oil bounced back. USOs again. You could look at crude, you could look at whatever you want. It did not get downside follow through, even though Goldman said it was a sell. The timing has been a little weird, but at this point, still not much. Below this low, it would be something worth watching. In here, it's not going to be that much of a headwind. XLE and OHs broke, the mid-level consolidation. If you remember, this was a good vehicle, when it went green before the market, came up into the 21-day, which tends to be stopping these weaker sectors, and then broke below this quick before finding some support. So at this point, maybe open up this channel a little bit, take this out of the way, and it's really not, very compelling to be trading this right now. Let it see if it can go sideways, show a little commitment to this, and then retrace. If oil bounces, maybe it gets a little bit better. But at this point, it's on the C list. OAHs also C list. On the A list here, went back to resistance 2. I wouldn't say resistance 3, and now there's really not much to do here. You could, I guess, widen this out also and see if it holds for a little bit. But if it doesn't, it's still a broken sector. This sector's been broken besides quick trades, for some time now. And you could, see hindsight, but you might as well make sure you draw these things. This is when the 8 and 21 day broke. Okay, this is when, bigger support broke, and then this is when it broke below the 200 day. Did it do what the market just did? Break below the 200 day, hover, and then reclaim it? No, it broke below it, stayed below it, showed real selling. Did I say real? I said real. Boom. And now it's just down here, and you had your bounce trade, and now we got to figure out what's next. And that also goes for some high beta names. Tesla, you haven't seen me trade it. It's been pretty weak. The bounce, in my opinion, was feeble. I was, on the recap arguing with Sperling last week because he was trying to buy it. I'm like, I don't see what you're seeing here. I see a bear flag. And meanwhile, I had that in my note also. And, lo and behold, boom, this got resolved to the downside. Okay, this did not reclaim the moving averages below all of them. Not like here when it was above the 8 day. And remember this big break here, it hasn't really, technically repaired itself since. You then had a bounce back, and remember the event day, big gap. Was that gap ever filled? Were people like, wow, this is really that much cheaper? No one could, we could buy it a lot lower here versus where it closed. Nope, never got filled. And that typically is a sign of future direction. And then today it broke, and now it's holding the 200 day, but doesn't look like that's going to continue. We shall see, but it's been a broken stock. Same way G-Pro has been a broken stock. G-Pro is following the 8 and 21 day, nice trend. When it broke above it, it was exciting right there. When it broke above this, that was exciting. But then once it broke the 8 and the 21 day, or the 8 day right here, that was your signal to change, move away, do less. Speeds and complexion has now changed. Tried to hold, didn't even really try and hold the 21 day, and now it closed below the 50, below this, and there's some price targets down all the way to here. We'll see what happens. But again, nice setup, supply and demand on new issues, and as long as that trend that you've been following stays intact, you stay with it. Once it changes, you get out of the way. I think actually one of my last trades here was puts, but I covered into this. This was actually over here. So it just goes to show you can move on. Things go from the A, B, and C list, and this is now on my C list, and it'll stay there. Mobley also, very wishy-washy, a little bit better than Tesla. It actually did a red dog reversal today. So maybe at some point it gets above this and continues. It's still younger in its whole existence, and I still think the technology could be everywhere. But this broke below the 8 and 21 day, so that's when I said, okay, I'm done trying to trade this. I actually stopped trying to trade it right around here on this little outside move. But now it looks like it's set up again, so maybe I'll put it back on the radar and see how we open tomorrow and if it's a trade above this 51-ish. Looks somewhat well. We'll see. But these are thin. Some guys were looking at some retail names. Let's see what happened here. Coors. Yeah, it looks, this one was a favorite of ours before it broke trend. And now this does seem like it's coming into an area that could retrace higher to maybe the 80s. So put that on the radar. Target, what are you doing? It's not great, but looks like you have a downtrend here. It's above the moving averages now, so there could be something going on as far as a trade to the upside. But not, this is like a B minus. So with all that said, the market in the last two sessions had a few reasons they could have pulled in and they didn't. We've had a big move off the low, so there's no reason to rush into things unless you have a thesis for it. Because again, we are a bit overbought, but that doesn't mean that everything's a short. It doesn't mean that's all you look for is shorts because, although there are some names that you could make money with that way, you just have to be selective the same way from the long side. That's the way we've been for, a month or so. And that's probably the way it's going to continue into year end. Very narrow-based move. You have to be where the action is. You can't look for the second and third tier guys within the stock that has the action. And, play it by ear. So there's been a lot of lack of memory from day to day. Recently, we've seen some memory as far as commitment to this up move, but who knows? At any point, I guess they can come in here and sideswipe you. So if you have 4, 5, 6 longs on, you probably should have some type of hedge, even though it'll take a little bit away from you if we just continue to the upside. And then you could always manage that hedge intraday. So it's Monday. Tomorrow's Tuesday, Brittany will be back. Looking forward to it. Hope you had a decent day. See you tomorrow. Have a good night.